Now, what I'm about to tell you, it doesn't matter whether or not your strategy is support and resistance, supply and demand, SMC using order blocks, any old shite that ICT talks about, or even slow moving average trend lines. But if you are not utilizing this candle, then believe me, you are leaving a lot of money on the table. And if you haven't guessed it yet, that candle is the very standard pin bar. It has been around from the beginning of time, and it is yet to fail any of the true traders of this world. It is a core staple part of your trading plan if you are going to be a successful trader. And in this video, I'm going to explain exactly why and how to use it. But all jokes aside, let's get rid of that. The pin bar, coupled with the candlestick, which I covered in the last video, is going to massively increase your win rate while trading. And this year, I have seen an increase of my own trading strategy of around 20% accuracy, which is massive in trading. So I'm going to go through today just exactly where you should use them and where you shouldn't use them. Because even though it is probably one of the most standard candlesticks that you'll ever see, it is still shocking to see how many people use them in the wrong places. So I'm going to show you where to use it properly. So first of all, let's just break down this little drawing which I've done, and then we'll go into the charts. This is a point of interest. Doesn't matter what it is. Could be an order block, could be a trend line, could be a high or a low or whatever. Now, think of the candlesticks from the very start, okay? So at this candle, before it turned into a pin bar, originally looked like this candle. So it was going to break through there, get rid of this. It was going to break up and carry on through. So at some point during this candle's life, it looked like a bullish candle. Then it basically closed down back within the range, okay? So what this is telling you is that price had the momentum originally to break through the area and sweep any of the liquidity which was left behind by previous orders. It could be stop losses, it could be breakout traders trying to get into the trend, and then all of a sudden it lost momentum. All those exchanges were done, and the candle ended up closing back in the range. Now, I use this on a daily basis. Whenever I see a trade, I'm looking for this candle or the previous candle, which the previous video was on. It is so simple to find. And then if you want additional confirmation, I'll cover that in another video. But this alone is what the majority of big time traders will use in their trade plans. There's no need to overcomplicate it. There's no need to leave a pending order on. There's no need to do a limit order and try and catch that falling knife. You're essentially waiting for the candle close, and then you place your order right on the close of the candle, which is technically the open of the next one. Put your stop loss pretty much behind that, and then feed it down to wherever you want it to go. Okay, so it's really simple in concept. So we're just going to jump into the charts really quickly and show you a couple of demonstrations as to where I would use these in my own trading plan. Now, we're going to go back to this little beauty from the start of the video. Okay, and there was a reason why I marked it out. It's pretty much how I trade with my methodology. Let's make sure you can actually see this. There is a order block just here, okay? I use order blocks in conjunction with other formats of trading, and they look something like this, okay? So price had come down and it had rebalanced all the way along here. We came down, we mitigated, we didn't do anything with it. But then if I wanted to get involved before chock, or if I wanted to get involved before any sort of major confirmation, I could use the pin bar as my confirmation to get into the market that we're now starting to shift. Now, if I don't see the other candle, but I see the pin bar, I'm equally as happy, because if you get the other candle and split it in half with the time frame, you're normally going to get a pin bar in there. So all what we're looking at essentially with the construct of the pin bar is this. Underneath these two wicks is liquidity, okay? I always say in the previous candles there's liquidity. Within order blocks there is a ton of liquidity, but really it's trying to catch the people out with their liquidity which they've left in the market. So under here is where there's liquidity, and there's also a little bit more within this wick over here. So what price has done is it's come down to a support area. It has wicked it. At some point, this looked like a black candle, and then towards the end of the candle, price pushed up and it ended up being bullish. It would be better if this was a full blue candle right at the top, so long wick at the bottom and then full blue with very little wick at the top, that would be much stronger in strength. But nonetheless, the way that you would trade this is very simply, again, using a market entry order, stop loss behind the low, and then you set your target wherever it's going to be. So pin bars are widely used in trading. They're used by bankers, they're used by fund managers, and I know this because I'm friends with quite a few of them, okay? I'm a retail trader. I have the funds of a retail trader. I don't have the funds of billions. They do, and they use these formats too. And why? Because it is simple. And that's how trading is meant to be. It's meant to be simple. It's not easy, but it's meant to be simple. They look at simple things like this for the trades which they're allowed to trade. Okay, the stuff which the algorithms aren't doing, they're going to be doing using pin bars a lot of the time. Okay, so let's just look at a downward pin bar, what one would look like. Prime example. Okay, we have again an order block just here. So as you'll know from my previous videos, an order block is essentially just blocked orders, people who are going in the wrong direction and get pulled down straight away or pulled, up. Depends which way you're trying to trade. But essentially, massive gap in the middle, okay? Price pushes up, looks like it's bullish. These guys, they can get out of their trade at break even or thereabouts, or banks doing their orders, they're starting to restack in, which is good. And then all of a sudden price pushes down and it closes bearish. Okay, so it continues with the prevailing trend. We get the rejection and then down we go. Really as simple as that. Again, like it's really simple, dead easy. It's a one candlestick formation, but it must be used in the correct place. You must use it either as a mitigation of a point of interest, or it must be a sweep of the area. Ideally, you want it as the sweep of the area because sometimes price will come back in and just take out the high or the low of the pin bar if it's still within the point of interest. But if you can get the sweep of the area, perfect. Get involved, set your trade, and walk away from the charts because you know that around 50% of the time or so, you're going to be correct. Now, I want to take you to a couple of areas where using a pin bar is not a good idea. Now, with most Forex candlestick patterns, some of them are really good, some of them are really bad. Some of them work extremely well in other places and really poorly in others. And this is an example of a candlestick working very poorly in the wrong place. So we just try not to use it there. So again, with my style of trading, I trade off of order blocks. I trade off of liquidity more than anything. And I try to follow the trend. Now, just because you see a candlestick forming in the format of a pin bar and you think, perfect, we've got a sweep of these highs, we've got a press down lower. What I need to do is I need to start matching this up with what's to the left. Pretty much nothing, okay? There's absolutely nothing which we're trying to take. There's no liquidity anywhere, okay? Just that will do. There's nothing anywhere. So these guys become the ones who are trapped in the wrong direction because we're midway up for a trend, because this, when we go left, is the area where it's actually sweeping liquidity and running into a previous order block and taking the liquidity from there. Now, also, a mistake which some people make is they mistake this type of candle for a pin bar, okay? It is not a pin bar. It has its own name and its own type, and it's got its own areas where you'd want to get involved in the market, but it's not what we're talking about today. In this format, the trend is going upwards, okay? We're getting continual breaks of the high, okay? So we're just getting a break of structure there, break of structure here, break of structure here, and then, you can see that you get a break of structure after that. But what has this candle got, which this candle doesn't have? This has got a bullish body, okay? We're wanting the market to reverse. We want it to look more like this candle, to be fair, but with more confluences. This one had no other confluences other than I've identified the candle, okay? It's got everything else going against it. It's going in an upward trend, okay? That's not good. It's not sweeping liquidity from anywhere. Maybe these last few candles, it's not mitigated anything. It's not swept anything way back in the distance. It's not in a key point of interest. Now, that's critical for this to work, okay? Really, you want to be taking the highs or the lows of a point of structure if you can, especially on a round number, so like a big round number, so using this being a bullish candle, it is not a pin bar. I'm going to try and find one which is going the opposite direction. Well, that wasn't very hard, so we've got one here, okay? So this is a push up, But again, it is in the wrong place. Okay, so even though this is a bullish setup and this is a pin bar, it's not necessarily in the type of place where I would want to try to utilize it. Again, as I mentioned before, it should really be a sweep or a mitigation of a previous point of interest. This is not. It has swept this area, but there's a lot of imbalance below. There's order blocks below. There's a reason for price to come back down to here to gather a little bit more momentum. This is not necessarily a safe place for me to be getting involved. I would like it to be, if price was to have sort of been working its way down to this and then push up. That would be fine as long as there was some structure held around here, because that would be telling me that we are rejecting this area. We've swept the liquidity and now we can push the market up again. But it's in the wrong place. So again, this is one which I would ignore. Now here's two which could work together. Okay, so we've got over here one order block. We have a second order block, which was rebalanced, to be fair. And we have price pressing down and pushing up. Okay, that's okay, but not fully convincing, because we do have this order block below. And we've got, sorry, you can't see it, we've got imbalance as well, which gives you like a sort of almost like a double negative. But then we have another push up and then another push up. Okay, so this is again just showing you strength to reject the area, which means that you can place your trade with that little bit more confidence. We have swept the lows which have previously been made. We have also taken liquidity out of this order block, and we can now start targeting a realistic high, or we can at least go for some supply coming into the market or something like that. So pin bars are absolutely phenomenal, but they do, I think, require you to be at the charts. Okay, so that is one pullback. You can do set and forget once you have placed your trades, but really what I do to try and make sure that I've got enough time during the day to do what I need to do is I set alerts. Okay, I set alerts usually before my points of interest, so I can get back to my monitor and I can look at it and wait for a pin bar to form, and then I can get involved in a trade. Although what I'm doing lately is I am using confirmation candles, which is going to be the next video, so feel free to watch that.